We're going to be getting inflation data and the most recent Fed minutes later today. Joining us to talk about it all right now is Sylvia Jablonski. She is CEO and Chief Investment Officer of Defiance ETFs. And Sylvia, I know that you have said volatility is really the word here, uncertainty, not knowing what's going on. But we have seen markets higher for 3 sessions in a row, despite all of the horrible geopolitical news that we've seen and concerns about what's happening in Washington. Why do you think that is?
Good morning, Becky. Great to be here today. Well, I think that the markets are starting to rally for a couple of reasons. The catalyst for that was probably the Fed sounding a little more dovish, saying that long-term yields are doing some of the work for them. That doesn't, sort of erase the whole thing and the uncertainty of where rates will go for the rest of the year. But that's news that the market likes to hear. So if we take a step back, in that case, we have a strong consumer, who has wages, who can spend, jobs are holding up, the economy's holding up, earnings season should be pretty good this year. And I think that, we got to an all-time high on pessimism again. Money pulled out of the markets. We saw a pullback of 3 to 4% on major indices. And you start getting that FOMO, and then that kind of comes back into the markets when things settle down. In terms of geopolitics, though, I do think that is, certainly something that could add volatility into the markets in the future, depending on, which direction all of that goes. Obviously, it's a terrible tragedy there.
So we have seen yields pull back as well. I mean, if higher yields are doing the Fed's job for them, is there a point where if yields do come back down because of a flight to safety, because of fewer concerns about an additional rate hike, or fewer concerns about inflation, actually undo that work and say, okay, the Fed has to be back on? I know that at this point the expectation is not that the Fed will do anything or won't raise rates come November.
Yeah, the expectation is that the Fed won't do anything. And, typically markets have an inverse correlation to yields. So I think if yields continue to come down, the markets will go up, although there will always be kind of that overhang of what if the Fed changes their mind on this? The Fed's been pretty clear on their messaging that, whether or not they're sort of finished and they're going to hold higher for longer, or there's another hike on the horizon, we're still within the next 12 months expecting, a cut in 2024, 2 cuts actually, according to the dot plot. So I think that the market is sort of stably, adhering to what the Fed chair will say. But to your point, I do think that other things can happen, right? We have PPI, we have CPI, and if we get hotter reads than we expect going into the end of the year, then I think all bets are off, and I do think you get a pullback. However, the way that it's looking, or if earnings season holds up, I think that fights some of inflation fears, and if inflation is kind of staying steady, then the Fed will probably hold course.
What do you think about higher oil prices as a concerning factor potentially for inflation data down the road? I mean, that's not going to show up in the core numbers that the Fed looks at immediately. But if you're talking about higher oil prices because of what's happening in the Middle East, you could be seeing things that put additional pressure, not to mention all of the labor strikes that we've seen and the pushes for much higher wages.
Yeah, and all of that certainly plays a role into the future of what, will drive the Fed to act in the future. I think that in the short term, we're going to see these spikes in oil prices, obviously, because of geopolitical issues. We're already starting to see that play out. And I think that, that's almost a conversation that will become interesting in terms of just geopolitics and what, different countries around the world sort of plan to do to, handle the oil situation. And I think that, if we don't kind of see, more supply coming into the market to cater to this, then that probably will be a number that impacts inflation. So in that case, we would have to see the other components of inflation coming down to combat that. It's certainly a risk.